All right, welcome everybody to Build Different Finance. Today we're going to be talking about a topic that affects every one of us, healthcare, right? The rising cost, confusing plans, limited flexibility have many of us searching for better options. That's why I'm really excited today about our conversation we're going to have. A lot of us are looking for a new approach, and here's one that's really been gaining a lot of traction. Impact Health is offering a lot of people flexibility and cost effective solutions. So, today, joining me is someone who's been deeply involved in helping individuals and families navigate healthcare options. Caleb Bergamini. He is a senior marketing director with the Miliari Group, and I'm super excited you're here. Welcome. Thanks for joining me today.
Oh, thank you so much, Anna. I really appreciate you having me as a guest, and I look forward to having this conversation here today. As you mentioned, healthcare is something that in the United States as a whole has become one of the most pressing, most voted on, most, should we call anxiety-causing issues. And when you look at myself and the Miliari Group as a whole, as a part of our mission to leave no family behind and ensure that everyone has access to equal opportunities within the financial space, healthcare is such an important piece of that, and impact has been such a foundational piece of our approach to it. So I'm very excited to share with you what we have and how impact works to help communities.
Awesome. So, tell me a little bit about yourself. How did you get into financial services?
Absolutely great question. So for me, I've been working in and around the financial industry for over a decade. Growing up, I grew up in southern Kentucky on a cattle farm. And so from a very early age, responsibilities, work ethic, and things like that were
Mhm.
pretty much non-negotiable. You were going to learn your work ethic and you're going to learn your responsibilities and how to care for things around you. And I suppose just over the course of time, the responsibilities I had there, the leadership that I had learned, and providing a service through my work carried with me. And as I got older, I actually looked at entrepreneurship first. I thought about perhaps going to medical school and then starting my own private practice, or maybe going into the military and trying to work with a leadership role there. But throughout the course of life, ultimately, I had a friend reach out to me one day and he said, "Hey, I have no idea what you have going on in life right now. I don't know the path you're on or what it is you're exactly trying to accomplish, but," he said, "if you've ever looked at the financial field, I think that there would be a really good place for you there." And when he first said that, I wasn't entirely sure where he saw that, but he went on to explain that if you look at statistics in the United States, and these are very easily accessible. You can Google a lot of these questions and you'll find a few articles or a few studies supporting this somewhere along the way. But one of the number one causes of divorce and broken marriage in the United States happens to be financial difficulty.
Oh, yeah.
Yeah, it's a very big challenge. And when you look at that, it doesn't just end there. One of the leading causes of things like crime, gang activity, murder, theft, burglary, all these types of different activities oftentimes stems from a place of financial destitution in hopes that these activities will lead to some sort of financial gain, or if nothing else, just financial homeostasis.
Yeah.
And then the final piece, kind of going in our conversation here today, is that if you look at stress statistics and medical statistics, one of the leading causes of stress in the United States happens to be financial turmoil and stress around that. And
Yeah.
as we know in the medical sense, stress is a root cause in a plethora of different illnesses, whether it be high blood pressure, high cholesterol, anxiety, depression, narcotics abuse, even something along the lines and as far as suicide. And
Mhm.
so if you look at the path that I was originally on, especially kind of considering a career in the medical field, a lot of what I would have done, and a lot of what is done in the United States today, is to treat a lot of those causes after they occur.
Right.
And so with
Yeah.
finances, I thought, what if there's a way that I might be able to get out in front of this and offer education within an industry that most people are not really taught in school? They're
Mhm.
not really taught in the workplace and they're not really taught at home. And what if there was a way in which we could offer unbiased opinions, free advice to Americans all across the US, Canada, and Puerto Rico about what's out there for them beyond what they've ever been exposed to?
Mhm.
And then find some solutions that might prevent some of these things from ever occurring, or if they do occur,
Mhm.
occur at a less severe level than they might otherwise. And
Yeah.
so that was about 10 years ago. Switched my degrees. I have a bachelor's degree in business economics, master's degrees in applied economics. I've worked in and around the financial space for that period of time. I've been with Miliari Group for about 6, going on 7 years,
Okay.
and it has been the ride of a lifetime.
That's awesome. I love that what you said about how finances affect families, right? So being proactive as soon as you can to do something about your finances and being proactive about your health. They kind of go hand in hand. Is that kind of how you started to get involved with Impact Share?
Absolutely. And so, it's kind of a funny turn of events, right? Because medicine was the path I originally thought I would go down. My father is a physician, my mother's a nurse practitioner, my
Hmm.
sister's an OB/GYN, other sister's a nurse practitioner as
Wow.
well. So it's kind of like a family type of business.
Yeah.
And as I started down that path, although I loved it, again, there was something internally just I struggled with so many of these issues being post care as opposed to preventative care.
Right. Mm.
And although there are some things like accidents or illnesses that have nothing to do with finances, regardless of what the accident, illness, or injury occurred, there is a financial burden that goes with it. And my father always
Mhm.
made the joke. He's like, he says, it's kind of sad, but if I go into a client's room or a patient's room and I have to tell them, hey, Mr. and Mrs. Patient, here's your diagnosis,
Mm.
it's X, Y, and Z,
Mhm.
there's definitely a level of just somberness and severity.
Right.
But the next question that he said most of the time they stress over is not the diagnosis, it's how in the world are we going to afford the treatment.
Right.
And so when you look at healthcare, look at the financial stresses of that along the journey, that's when I made a decision of what if I transition from healthcare over to wealth care?
Yeah. Hmm.
Because they both go hand in hand. And so that was a big piece of it for sure. And the full circle moment was over my course of Miliari Group. And for those on the call that are not familiar with who we are, what we do, Miliari Group is a non-captive financial agency. We
Hmm.
work all across the United States, all across Canada and Puerto Rico. But as a non-captive agency, our role is a little bit different than most men and women's roles in finance.
Hmm.
Most roles in finance that people they picture is a man or woman sitting at a desk with a computer, trading stocks, or at a bank, brick and mortar location. Those are phenomenal roles. But Miliari Group works on what we call the back end of finance.
Hmm.
The front end of finance is like those companies you see down your street, the Geicos, the Nationwides, the BlackRocks, the Merrill Lynches. These companies are phenomenal, and if you go into these companies, you'll receive products and advice and services from that company, that industry. But what about all the others out there? What if there's something that maybe that company doesn't have access to? That's where we are in the back end. We're not tied to one industry or one company, but we offer a whole plethora of services across all these different industries to put together a more custom built financial plan based upon you and your situation. And so where this came into healthcare is Miliari Group to date, Shanna, has up to 190 plus A-rated firms on our platform
Hmm.
across insurance, banking, securities, financial planning, tax services, estate planning,
Hmm.
trusts and legal formations, business formations, and healthcare. And because of my background, kind of going along the lines of finance, plus a little bit along the lines of healthcare,
Hmm.
one of the roles that I was tasked with was identifying companies out there that could be a part of our platform and be able to offer
Okay.
the clients. And so, about a year and a half, 2 years ago, we set out with the intention of really bringing on some healthcare providers and alternative healthcare options.
Hmm.
And Impact Health Sharing was one of the ones that we identified and spent a year building that relationship with. And very, very pleased to say that now we can represent them in full force. And they've done some wonders for us and our clientele.
That's awesome. I love that there's a lot of options. A lot of people go to the marketplace, which is really expensive, and they don't really know what they're doing. Like I need health insurance. Where do I go now? So with
Yeah.
Impact Health, it's really great. And so tell me a little bit about Impact Health. Like, what is it exactly?
That's a great, great question. So we'll start off by saying what Impact Health is.
Hmm.
So most Americans are familiar with something called health insurance.
Hmm.
Health insurance, like most people find, they receive it through their employer. And
Hmm.
these are very large healthcare firms that are designed to intake premiums, pool those premiums, and then pay out for various medical expenses and illnesses.
Hmm.
Well, although there's nothing wrong with that, there's a few things that's really important to know about how most Americans source these types of healthcare plans. The first thing is that most Americans source them through their employers.
Right.
Now,
Hmm.
what this does is it does create a little bit of a discount for you. But one of the negatives is just like how most people plan their financials and their retirement through their employers, one of the negatives is that if you receive it through your employer reserves the right and has the authority to make changes to your plan.
Right.
It can pick and choose what is on your plan, what is covered and what is not. It could also choose to reduce those benefits, and
Mhm.
it can even choose to take those benefits away from you if they put you part-time, laid off, or fire
Mhm.
you.
Right.
And
Yeah.
so when we think about this, how many of us have heard horror stories of, oh, I had health insurance, but they didn't pay out on all these things. It's a big
Mhm.
scam. Well, 9 times out of 10, it's not really a scam. It's more so that you sourced it through an employer, and that employer decided with the healthcare firm what they wanted to cover and what they didn't. But most Americans make this mistake of thinking, well, if I have health insurance, it covers anything and everything.
Right, where they tell us what to do, right?
Yeah, not necessarily. You have to read exactly what it is that your plan covers and what it doesn't, and then plan accordingly. And so the challenge with that is you do get a healthcare, but that healthcare is kind of limited in its scope. And at the end of the day, it is controlled and provided to you and your family by someone else. And the question that I propose to my clients is when you look at how much we prioritize our healthcare,
Mhm.
how much it means for our families, and how much it actually depends upon for ourselves, where if something happens to myself as a family provider, that's an incredible important piece of not only my family's financial piece, but their mental piece, their emotional piece, their physical piece. Having that healthcare personally, privately owned is one of the greatest things that I think that someone can do. That way, no matter where you go, no matter what you do, no matter what your employer says, your protection and your family's protection is permanent.
Mhm.
But as you said, that now makes us go to places like the marketplace.
Mhm.
And as you just described, marketplace plans, although more personalized, although more custom, they are more expensive, especially
Mhm.
depending upon you and your situation trying to cover a family. So expensive that many Americans don't have the option. They don't have the choice of going marketplace private versus, public through their corporation. And that's where companies like Impact really step in. They're a little bit different than what most people are familiar with health insurance, and that's because there's something called health sharing.
Right.
So, what exactly is the difference between health insurance and
Right.
health sharing?
Yeah.
Well, let's actually start with how they're similar. I
Okay.
think that's the biggest piece. Let's make sure we understand what the bridge is. Health insurance and health sharing are both companies designed to intake client premiums, to
Mhm.
pool those premiums appropriately, keep reserves based upon the amount of members they have and the exposures to risk, and then pay out those reserves to help cover members' bills.
Mhm.
In their foundations, in their charters, they're both very, very similar. Really, the biggest difference between health insurance and health sharing is that one is a for-profit corporation and the other is ran through a nonprofit. And
Okay.
so, as simple as that is, why is that so significant? Well, in a for profit corporation such as health insurance, yes, they want to take those premiums in for you, pool those premiums, and then pay out medical bills. But at the end of the day, there is a board and there are shareholders that, like all for profit companies, are trying to turn a profit.
Mhm.
Therefore, a piece of the premiums you pay are not going 100% to the pool of funds to pay out, but are actually going to produce dividends and excess returns for whatever shareholders the company has. Secondly, because health insurance usually is going into very large groups of organizations and insuring a lot of different people, the evaluation you receive isn't always necessarily based upon you and your family's risk and utilization.
Okay. Mhm.
What that means is you and your family may be relatively healthy, and maybe you only go to the doctor once or twice a year, but someone down the road that health insurance company covers in the same company or same group might have a little bit less of a priority, less of an ideal health than you that really utilizes a lot. And so a portion of your premiums go to help fund that.
Mhm. Mhm.
Well, when you look at health sharing is a little bit different in the fact that because it is a nonprofit, there's no shareholders, there's no board of directors that is trying to produce profits. 100% of the funds that go in almost entirely pay out to the members, and they are
Mhm.
managed not by just some guy sitting back in an office, but by actually a deregulated, centralized kind of bank, so to speak. Not a bank like the way we see like on the street corner, but the actual health sharing company has like a deregulated sense of funds where they are required to pool these, hold these, keep reserves of these funds, very similar to health insurance, and pay out. And so both companies in their actual design are extremely, extremely similar in their function. It's just how they're set up that determines where exactly is the money going one over the other. The second thing that's really important to understand when it comes to the differences between the two is how exactly is one stronger or is one weaker than the other? And the reason I say that is if people Google health sharing is not a new concept. It's actually been around for decades. In fact, as of 2025, I believe the number was 3.2 trillion by some counts. Roughly 3.2 billion. I apologize. 3.2 billion by some counts was shared across health sharing platforms in the United States.
Mhm.
And basically, what health sharing decided to do was they looked at these health insurance corporations and they realized that over the course of time, these have become more so corporations designed around a profit.
Mhm.
And we want to go back to more of a community-based approach designed around a person. How do we sit there and create plans for the average American who is in decent health, but wants something individualistic and private?
Mhm.
And so health sharing, that idea is decades old. And as I said, it's been responsible for roughly 3 billion over the past year alone. So why is it not more mainstream? Why is it not more talked about? And it's because typically health sharing organizations are limited to certain geographical areas or certain people groups.
Right.
Meaning that you might have the South Central Miami-Dade County health sharing community
Mhm.
or the Church of Latter-day Saints health sharing community to where you had to be either in a certain region or a certain demographic of people, group, or organization
Right.
to partake in those health sharing communities. And using that Miami one, for example, if you lived in the Miami-Dade area and you were a part of that organization, well, a lot of those hospitals in Miami-Dade, they participate in those plans. And so you could use it very well there. But let's say you go on a ski trip to Colorado with your family and you have an accident and you tear
Mhm.
your ACL and you go to a hospital in Colorado. Well, if you're a part of a more local Miami-Dade health sharing community and you go to a hospital in Colorado, they
Mm.
may not recognize it. And at
Right.
that point, one of the biggest inconveniences is that you can still go to that hospital in Colorado, but you probably can't actually use your health sharing membership to cover that bill. You'd have to pay out of pocket and
Okay.
then go back to Miami and submit the bill to the health sharing company that would then reimburse you.
Right. So an easy plan like having Cigna, right? So
Yeah,
when you're in those kind of programs, then you were like, well, it's too complicated, right? I don't want to join.
exactly. It was a little bit more complicated, although still effective, still covered your bills.
Mm-hmm.
It didn't really work on a national scale. Well, that's where Impact's a little bit different. Impact is one of the only health sharing firms that is not only national, but doesn't restrict anyone to be a part of it. You don't have to be a part of a certain group or an organization or community or ethnicity or
No.
location. They're a national health sharing firm, and
Mhm.
they're actually so large that, get this, this is pretty cool. They cover over 22,000 families at this point, and then add
Wow.
on, so a very, very large presence across the United States. And in the past 5 years alone, have already covered just under 300 million in medical bills. So it's one
Wow.
of the largest, most highly rated health sharing organizations within the United States. And because of its size, because of its presence, one of the very unique things to Impact is they are actually a part of the same EDI payer network
Mm-hmm.
that health insurance companies partake in. And so what is
Okay.
that EDI payer network? That's when you go to you go to your doctor and you give them your health insurance card.
Mm-hmm.
There's a number on there that which is that provider's payment ID. Your health care professional, their billing specialist enters that number into their system, and no
Okay.
matter where you are in the US, it pulls up that health insurance organization to bill them.
Mm-hmm.
Health sharing typically is not ever to the size or the credibility where it can be a part of that, but Impact actually is, which is one of the really cool benefits because now it doesn't matter where you are at in the United States, you can bill Impact directly the same way you would bill a traditional health insurance firm. So, very, very cool feature that's
Yeah.
almost exclusively unique to them.
That's really good because you want the functionality. We're all used to our regular insurance, right? That we get with our
Yeah,
employer. You get your little card. It says your copay, it says your deductible, and you go into the doctor, and then you don't kind of worry about it. So does Impact Health function the same way? Do you get a card? Do you have a copay?
absolutely. Absolutely. And so Impact Health Sharing is extremely similar. And I would say that is every single thing like health insurance, but it's just not health insurance, it's health sharing. And I say this not as someone who is employed by Impact. Impact doesn't contract me, they don't pay me or anything like that. They're one of many healthcare companies that we have the ability to refer out to and do
Yeah,
business with on our platform. But the reason
yeah,
why they become so attractive to us is because of all the recent changes to the ACA, especially in 2026, and how expensive healthcare has gotten.
yeah.
This has become an amazing alternative for those individuals that it is a good fit for.
Hmm.
But yes, when you enroll with Impact, quoting is extremely simple. Billing is extremely simple. And when you are enrolled, you receive a card just like you do for health insurance.
Okay.
You can carry that card in your wallets. You can have an online version of it if you want to go and just have it scanned or pulled up referenced. But when you go to a medical provider, the exact same thing. You walk up and you say, hey, look, this is what I'm with. This is the company I work through. It's a health sharing company. And Impact is very good about letting you know, hey, remember, traditionally, when providers hear health sharing, they think small community. They might originally say, hey, well, health sharing doesn't really work here, you have to pay out of pocket.
Right.
But with Impact, they have an incredible informational structure, a packet that they send you with your card that walks you exactly through how to go to your doctor. And that way, when the doctor, if they give you that little bit of pushback, well, typically we don't bill health sharing, it walks you through how to pre-frame that, how to make sure they do. And then it's
Okay.
give them that card, build that network ID, and to make it
Mhm.
even easier, Impact offers you and all of your family members on the plan one free complimentary physical per year. And they recommend that when you get your card, don't wait until you're sick or injured to go to the doctor to use it. Book that free physical. That way,
Mhm.
when you go, you're healthy, you're feeling fine, you get a checkup. But
Mhm.
more importantly, you get to show your doctor that impact card and they can be familiar with it and have it in their system while you're healthy. That way, you don't have to deal with the hassle when you're ill.
Yeah, that's great. And basically having that card with the number that they can input and realize, oh, this functions as normal insurance, right, is really helpful. I think
Very,
that's the
very simple.
thing, right? People get anxious about, like, what am I going to do and how does it work? What is the typical individual or family that might benefit from Impact Health?
What does that typical demographic look like? Perfect question. So, impact is for those that I would say are healthy to fairly healthy.
Okay.
Healthy to fairly healthy. And so, what do I mean by that? Well, I'll give you more of an example of what impact doesn't cover, and then you listeners can kind of determine from there if it makes sense to look into for themselves. But one thing that's extremely important to note is very similar to a lot of health insurance companies. Impact is a little bit particular and doesn't cover pre-existing conditions.
Okay.
Now, what's a pre-existing condition? In Impact's definitions, a pre-existing condition is any type of condition that you've had a diagnosis, you've had treatment, you've had medical checkups for, any medications for, surgeries for, anything you've had like a medical diagnosis or related treatment for in the past 3 years.
Okay.
It's within the past 3 years, that will not be covered by Impact. So, as a prime example, let's say that 18 months ago, I had an accident and I ruptured my spleen. Well, the surgeries that I've had since then, those may be done. Those might have been covered by my previous health insurance provider. But on Impact, let's say I'm for the next 3 years, I still have to do routine checkups just to make sure I'm good and I'm on some medications for it.
Okay.
Because it was a pre-existing injury over the past 18 months, then that's not going to be covered. Anything future going forward is not going to be covered until I have my last checkup and I'm given the all clear.
Okay.
Once I'm given the all clear, 3 years from that last all clear date, it actually now rolls off as a pre-existing condition. And if I have a new injury to my spleen, I'm good to go. Another great thing would be a really good example here would be type 2 diabetes. Type 2 diabetes is a lifestyle diabetes. If you have type 2 diabetes, when you go on Impact, you're not going to be considered eligible for coverage for the diabetes. It's a pre-existing condition.
Okay.
But if a year from now you get weight under control, you manage your blood sugars accordingly, and you are now, quote, diabetes free, well, if you can maintain diabetes free status for 3 years since your last bout with diabetes, you are now no longer considering have a pre-existing condition.
Okay.
And so that's just an important thing to note. Does that mean if you have a pre-existing condition that you shouldn't go with Impact? No, of course not. It's case by case. We've had several clients come up to us and say, look, we're paying $2,200 a month for health insurance, and we're quoting with Impact, and Impact can save up to 50% depending upon the client case, sometimes even more. if we can go from 2,200 down to let's call 750 a month, the pre-existing condition that we have, we're paying like it's like a $300 per month prescription that we take. Financially, it makes more sense to switch to Impact, get the 750 plus 300 out of pocket than it does to pay 2250
Right.
a month. So
Yeah.
it really just depends. And it's a very, very big benefit for those that are self-employed, independent contractors, healthy families that are looking for a very competitive health coverage.
Mhm.
But that's what I would say is if you're on dialysis, if you're an organ failure and you've got a health insurance company that's covering that, you're in extreme cancer treatment and you already have it and the company's covering that, Impact's not going to be the right move for you. Stay with where you have what you have.
Mhm.
But if someone's not sure, that's where a very quick, easy consultation with us to walk them through the guidelines and what their coverage options are. That's one of the easiest ways to find out for sure.
I think that's a really good point. You talked about kind of the price differences
Mm.
and some of the savings that you can have with Impact. So, how would you say it's more cost effective than regular insurance? What are your thoughts there?
That's a really good way to look at it. The answer is going to be depends. You have some people that their health insurance, whether privately owned or through the marketplace with a company, is extremely competitive, and they may like it. That may be where they want to go. You have some people that already have medical conditions that they're currently trying to cover, and if that's the case, their current provider may be the better path. But from my personal experience, again, if you're in that healthy to fairly healthy to extremely healthy group,
Mm-hmm.
then I would always encourage at least get a quote, see what it looks like. And quoting is extremely simple. You can receive a quote with under 5 minutes for you and your entire family. But typically, for that fairly healthy to very healthy type of group, Impact will save 30 up to 30 to 50% on average of
Wow.
healthcare costs. And I've seen it go higher than that for some people. It just really depends upon what you're looking for, what your levels of risk are, and what you're willing to cover on your own as far as out-of-pocket expenses. Very similar to a health insurance plan. But the big, again, cost savings comes from the fact that number one, we're running through a nonprofit as opposed to a for-profit that is trying to generate income for shareholders that we
Mhm.
never meet or see. And then number two, the fact that Impact is able to evaluate a little bit more independently as opposed to broad group-based companies
Right.
helps lower those costs for
Yeah.
sure.
And I think it's like what you said about the value. You might pay so much for Impact, and then maybe you have a few other expenses you've got to cover. But because you're paying so much less, then you'll overall, it's really valuable to people. You don't have to pay as much money. And what would you say is like one of the perks and the benefits in being in a
Oh, I'm
health
so glad you
plan like
asked.
this? Yeah, this is my favorite part, just
Yeah,
so you
I'm
guys
so glad
know.
you asked because there's a lot of cool perks that I myself have been able to utilize since being a part of Impact that I was not able to utilize as part of health insurance. And one of the biggest perks is something called wellness rewards.
Mhm.
And so remember that as a nonprofit, they are still required to intake client premium, pool those premiums according to certain reserves per amount of clients they have. And just to throw this out there, Miliari Group, because of our due diligence to our clients and wanting to make sure we only work with the best that we can find,
Mhm.
we spent about a year doing a full deep dive into Impact's financials and their financial history. What were they like through COVID? Did they have any financial
Good.
difficulties? What are they like now? We found that the average health insurance company keeps about 3 to 5 months client reserves, so funds. Impact usually keeps 12 to 14. And so
Okay,
a
that's
very
great.
strong financial backing.
Mhm.
But the second thing is what happens when that backing gets too high, when
Mhm.
those reserves get too high?
Mhm.
Well, now all of a sudden a nonprofit starts to look like it's a for profit,
Okay.
and that could cause some problems. And so, what Impact does is, in order to divest themselves of these excess funds, they have to find a way to lower them. And what they do this through is something called wellness rewards. And there's a whole list of these wellness rewards, but these are perks that the Impact actually gives back to its members, one of which is they cover that free annual physical for each one of your family members on the
Mhm.
plan every single year. The second thing is they'll give each family member a $150 lab credit if you want to get blood work done.
Okay.
They also have ways in which you can lower your PRA. And so your PRA, this is the primary responsibility amount. And this is the amount of money that you pay out of pocket before impact kicks in. And let's just say you chose a $5,000 PRA.
Mhm.
Well, each month, by doing certain healthy activities that lower your risk and therefore lower impact's risk of paying out, they will give you up to $150 off
Wow.
your annual PRA. And so, what do these activities look like? Well, if you have a gym membership, if you purchase vitamins, if you
Mm.
go to Zumba, hot yoga, if you have a MyFitnessPal to track diets, if you have a Peloton membership, if you get acupuncture, if you have massage therapy, if you go to a chiropractor, or even if you are someone who prefers more holistic medications and methods where a lot of health insurance won't cover.
No, they won't.
But if you're more of a holistic remedy type of person, you
Mhm.
can take 100, you can take your receipts and submit them to Impact and up to $150, dollar for dollar deduction.
Nice.
They can lower your PRA up to $1,800 a year. 150 per
Wow.
month times 12 months, 1,800 per year. And all of a sudden, if you or your family gets sick, that 5,000 now lowers to 3,200 at the
That
end of
is
that first
excellent.
year.
Yeah, I love
So
that.
those wellness rewards are phenomenal and they are absolutely fantastic.
Hmm.
Another really big perk of Impact that we have found to be extremely beneficial is something called reference-based pricing.
Okay.
And so, reference-based pricing, this is something that typical health insurance providers will do. When you get billed for, let's say an appendectomy, and let's say you go to a hospital in Manhattan, New York. Well, that same surgery across the river in Jersey might have a very different cost based
Mhm.
upon the physician that operated on the surgery, the hospital you went to, when you went. Hospitals, they charge a little bit differently based upon the service. And what's even crazy is that there are some hospitals that, on the same service, on the same age, on the same day, actual charge various amounts. And there's a case that Impact actually shared with us, and we've been able to verify and share with others of two twins, twin boys, both having their appendixes, whatever, an appendectomy on the exact same day at the exact same hospital at the exact same age, and one's bill was much higher than the other.
Oh,
Now,
wow.
it could
From the
be that,
doctor, right? And where
yeah,
they were.
it
Okay.
could be that one boy had a greater medical risk that they needed to accommodate for, and that explained the excess billing. But it also very well could be that the surgeon that performed the surgery on one child was different than the surgeon that performed on another child. And maybe those two surgeons' salaries were different and the hospital bills differently based upon the surgeries they do to offset their salaries.
Okay.
We don't know for sure, but we do have the proof and the bills from the hospital for the same age, same surgery, same day. And so, how in the world is someone supposed to counter that? Well, what Impact does is they use something called reference-based pricing, which looks at the cost of that surgery and compares it to what it relatively costs in other hospitals around the area, and they will actually be able to negotiate with the hospital what it should be cost. And half the time, or I should say a very large percentage of the time, Impact quotes around 60 to 70%.
Wow.
They're able to actually lower and negotiate those bills down as a health sharing company, which is kind of wild. And why is that so important? Well, health insurance companies do that, but what they're able to negotiate down, not all the time do they actually negotiate it down that distance. Sometimes what they might keep in that negotiation process then is able to go back to act as profits. It's not necessarily passed on to you, but with health sharing as a nonprofit,
Hmm.
Impact is able to fully pass 100% of that renegotiated amount back to you on your bill, therefore causing you and your family less stress, less responsibility, and so on and so forth.
It definitely seems like a company that's for its clients, kind of like us with Miliari Group and how,
Yeah,
with financial services, we're trying to find what fits the client, right? And I like that that money comes back and you're able to use it towards your what yearly deductible, we would normally call it, right? And so then that lessens your cost. And then now, once that deductible's met, they pay a percentage. And so, just like
right.
typical insurance, right? Anything that's typical and normal that we understand, we like that that could be transferred to something that's more beneficial for us. And
Right.
I think what we talked about before is I'm into natural medicine. Not everybody is, but maybe somebody who isn't that has an accident and then they have to do chiropractic. Wow, it's awesome because now that can be covered towards your deductible, right? And
Absolutely.
so, um, how if somebody is interested in getting in more information about impact, how do they go about that? What would they do?
That's a phenomenal question. And before I answer it, I want to add on one more perk. You had mentioned something in your statement there that I thought would be very good to add a little bit more to. You talked about they feel like they're very much so for the client.
Mm-hmm.
And I want to go ahead and reiterate that again, I do not work for Impact. I am not paid by Impact. I'm not a sponsor from Impact whatsoever. I've just been able to utilize this in my personal life and for our clients. And after a year and a half of vetting them and interviewing with them and meeting with them and seeing what they've done, the client stories have been phenomenal.
Mm-hmm.
And we had the same question: how in the world are they set up to do this in the way that they're doing it, and
Right.
why? Like, why
Yeah.
are they so client
Why is
focused?
a good question. Yeah, I like
Yeah.
that.
Of all other health sharing companies out there that have been trying to do the same thing, how have they become so much more advanced? And what we found, you can actually go to and research Impact on their website, and this story is on there about who they are and how they got to be. But their founder is a gentleman by the name of Phil Chrysler. Phil Chrysler started Impact years ago because he felt like, well, I shouldn't say he felt like, there was an instance in which his own family had medical needs
Mm-hmm.
and the health insurance company they were with denied the claims. And that
Mm-hmm.
caused a tremendous amount of emotional strife and grief, financial strife and grief. And he felt this just passion inside of, hey, like I am going to find something that fixes this. And he spent years creating, developing, securing sponsors for, and building Impact into what it is today. And what's amazing about it is that as big and as powerful and as impressive as they've become, he refused to let outside companies come in and take ownership. Like the moment other owners come in, the moment other people come in, other agendas come in, the mission varies. And
Mm-hmm.
so making sure that because of his own personal family's challenges and difficulties and issues, this is where it was built, this is what it stayed, and he has cemented the very best of his ability that this will be a client first crusade company based on what happened to me and my family, making sure no one else has to experience that.
Mm-hmm.
And so the financials aside, the coverage aside, the perks aside, it was actually getting to meet him, speak with his leadership, understand what he's doing this for and why he's doing it that made us so incredibly confident of moving forward in this partnership. So great
Yeah.
touch point there for those that are wondering how in the world is this one so different. I think that
Mm-hmm.
that's a big reason why. There's a personal why behind it from the very
Yeah.
founder himself.
When when somebody has passion and it affects them personally, then they go out and they try to fix the problem. And that's kind of like us, we see that people have needs and we want to
Mm,
help them, right? It's not just about putting money in our pockets. It's like, if I know something great, I want to share it with you. And I love
yeah,
that he took that situation that was probably a hardship and turned it into a positive and is sharing it with
absolutely.
all of us. So that's incredible.
Absolutely. And trust me, although we spent about a year and a half vetting them, they spent about a year and a half vetting us to make sure that they affiliated themselves with a good company as well. And so to answer your original question, as far as like how does someone become involved? How do they look at impact? Well, there are a few different ways, and I'll tell you the two primary ones. Um, as I said, Impact is a standalone company. We don't own them, they don't own us. We just have a partnership together. So you can go directly to Impact itself. And you can go to their website, you can quote yourself, you can ask questions, you can price yourself, and you can actually enroll through Impact directly from their website. The other path, and this is the path that I would personally recommend, is our agency, again, has a partnership with them. Book a consultation with one of us and our firms, and there's a few reasons why. Number one, it doesn't cost you anymore. There is no upcharge to go through us than
Mhm,
to go through Impact directly. There is no sales charges, there's no hidden fees, there's nothing that hits you on the back end. Nothing at all.
mhm,
But by going through us, a few different things happen. Number one, you have one of our licensed financial strategists navigating this with you. And
mhm,
our firm has a direct relationship with Impact, even their higher levels, so that if you ever had a question or if you ever had an issue, Impact is phenomenal at resolving them. But having someone from our firm, our partnership, our affiliated lines on your side could help you get answers, clarity, and questions faster.
mhm.
So it's having that that big brother, so to speak up and go to bat for you is a huge benefit. But the second benefit is this. We talked about how healthcare is one of the biggest pain points for most Americans, and it's also one of the most important things they have for protection for their family, and they're willing to pay a price for it. A
Mhm.
price typically so high that oftentimes it eliminates their ability to do other things.
Mm,
And
mhm.
so if we were to ask most Americans, hey, out of curiosity, like, what are your financial goals and dreams? What would you like to accomplish, and when would you like to accomplish it? Most could probably paint a really big picture. They could paint the house they want. They could paint the life they want their kids to have. They could paint what retirement looks like and how it would feel to get out of debt. But if you ask most Americans what they're doing to get there and if they feel like they're doing enough, most will say, well, I'm doing the best that I can, but I really can't do a whole lot because expenses are so high and healthcare being one of the main ones.
Mhm.
Well, impact can have the ability to help reduce that healthcare cost. But what about those other goals, those other dreams? Well, when we sit down with one of our licensed professionals, we'll look at impact for you in your plan.
Mhm.
But let's say we are able to give that example I gave a moment ago, take it from $2,200 a month down to about 750.
It's awesome.
What could we do with that remaining, $13 to
Mhm.
$1,500? Could we take a piece of it and allocate it to a special child's fund for you? Could
Mhm.
we take another piece of it and could we find a way to better pay off your debt at a lower interest rate and get you out of it faster? Could we take a piece of it and help you save for that family vacation or maybe find a way to cut 3 or 4 years off your retirement?
Mhm.
Now, what's cool about that is the same product's the same service, but instead of keeping them isolated, impacts over there, finances over there, mortgages over there, debts over there,
Mhm.
you could have someone at our firm that's licensed and able to look at all these things, trained at all these things, and not just trained in isolation, but train how to use them in unison and find
Yeah.
a way to put them together, kind of like I envision it as a financial quarterback overseeing a financial offense. Each player has their role, each position has its strength and its purpose, but you have one person, you have a quarterback, you have a head coach, you have a staffing coordinator that makes sure all these different players are on the same team and
Yeah.
moving together down the field together. And so that is the one that I personally recommend. And again, with Miliari Group, there's not a hidden fee, there's no extra cost, there's no charge to sit down with us whatsoever. But it's a another person stepping up to the plate for you that is have the ability to answer questions and do research and impact that perhaps you haven't been able to do on your own.
Mhm.
You can include it in a part of a bigger plan, and it's something that, if nothing else, at the end of the day, if impact is able to save you money, phenomenal. If impact's able to save you money and we're able to help you share with you how to put that money to work for you and your family better than what you're currently doing, that's just a
Mhm.
win all around.
It definitely is. I mean, it's kind of like a one-stop shop. I don't want to stop at all these different places. I want to kind of have someone that I trust and I know that I can talk to about all the different things that will kind of stand up and, I guess, fight for me, but really, take the due diligence, like you said, to go over everything going on in your life. And I know that a lot of people have a hard time with healthcare, and so I love that Impact Share is not a one-stop shop. There's not one solution that fits everybody. Everybody's kind of on a different path. They can go there and work with us, and we can give them a little information and then follow up, if they have
Yeah,
questions or, why won't I qualify? Or what if I have this, will I qualify? Then we can kind of go and be an advocate for them. So I
cool.
like that you said that for sure. And so, I'm excited. I'm excited for more people to know about it. I'm excited for people to hop on and save that money. I looked at it for
Absolutely.
our family and I was like, oh my gosh, the cost savings is, wow, it's incredible.
And what I love about it too, though, and this was something that we really, really wanted to focus on as a firm, is that cost is only a question of the absence of value. And a lot of people, ourselves included, thought, okay, if we're going to pay less, what is it exactly? Are we getting a less competitive coverage? Are we going to be left out to dry? Are we paying for something that's,
Good point.
you know, less quality for our families? Because that's one thing that myself, and I'm sure you and any client listening, they're not going to want to sit there and sacrifice that. But that's where, after again, like 18 months of flying back and forth to visit them on endless Zoom calls, financial sheets, having outside third party vetters look through it all and make sure it's good, we found that, okay, hey, yes, it is the ability to get a lower cost, but the coverage and the competitiveness of it is not sacrificed whatsoever. All that extra cost savings isn't coming from taking away from the community and the people. It's
Hmm.
in taking it away from the corporate fees and the for-profit nature of a lot of health insurance companies. And
Hmm.
so when you're pulling money from the right people to give to the actual client itself, as opposing to pulling coverage from the client to give to the wrong people, that's what you want to do. And that's exactly what Impact is able to do for us in our experience. And um, more than happy to sit down with you today and share all that I can about it and what they've done for myself and what they've done for others and
Yeah.
so on.
Well, thank you so much. I love like what you're sharing right now. The value, it doesn't get diminished by the cost.
Mhm.
You still have great value while not spending so much money. So, thank you so much, Caleb, for hopping on. Anything else that you would like to share?
No, I was going to say thank you so much for your time today and asking me to be a part of this and giving me the opportunity to share with you what we've been able to share with a lot of other people. And then, of course, like whatever you need, whatever you need as far as information from me or guidance from me, I want you to know that I'm happy to provide that. So anyone who's listening to this, if they ever want to speak with me directly or one of my colleagues on this, I'm happy to open that window and open that door for you to do so.
Awesome. Well, I will put my information in the chat if anybody wants to reach out. And I thank you so much. This has been a really amazing episode, talking about healthcare. It's so important for all of us. Please, everybody, stay informed, be prepared, like, share, subscribe, all those fun things. Hit that bell for notifications. And we are here to help you with your financial future. And we just appreciate you all for tuning in. Thank you again so much, for Caleb coming on. And it was great information. And I look forward to people hearing it and getting themselves in a better healthcare situation. So thanks, everybody. Bye.